REG becomes much easier when you first identify who the taxpayer is. Individuals, C corporations, S corporations, partnerships, LLCs, and tax-exempt organizations can have similar transactions but very different tax consequences.
Like I just said, this quote right here, this is the absolute most important paradigm shift you need to make right now. Getting this mental map perfectly clear is the absolute foundation you need to pass REG and avoid those frustrating unforced errors on exam day. Section 1. Why entity classification matters. Let's get right into it. So many candidates drop easy points on multiple choice questions and task-based simulations simply because they apply the right tax rule to the wrong taxpayer. You literally cannot treat a partnership like a C corporation, and you definitely can't treat an S corporation like a sole proprietorship. So your absolute first step, before you even touch your calculator, before you start hunting for some indexed phase-out limit, is to stop and ask yourself exactly whose return am I working on right now? Are you preparing Form 1040 for an individual, Form 1120 for a C Corp, maybe a 1065 for a partnership? The facts in the question will dictate your path, but you have to actively identify that entity first. And hey, quick side note, the exam generally provides indexed limits and rates when you need them, so focus your mental energy on getting this entity classification right rather than memorizing tiny exceptions.
Section 2. Individuals. Okay, let's dive into this, starting with the baseline, the individual taxpayer. We're talking about your classic Form 1040. Individual tax questions heavily test the linear flow of the return. It's like a cascading waterfall. You need to know what to include in gross income, think wages, interest, punitive damages, and what you get to exclude. From there, you calculate adjusted gross income, or AGI. Then you arrive at taxable income, calculate the tax itself, and finally, apply any non-refundable or refundable credits. Crucially, this is also where the income from pass-through entities ultimately lands. So when you're looking at an individual question, you'll often be evaluating their filing status, loss limitations, and exactly how they report the items passed down to them from businesses they own.
Section 3. C corporations. Let's move over to the business side and look at the true, separate taxable entity, the C corporation. A C corporation is completely separate from its owners for tax purposes. It pays tax on its own income at the entity level, at a flat corporate rate. The primary focus here on the exam is going to be understanding book-to-tax differences, allowable corporate deductions, and calculating that entity-level taxable income. But here's the kicker. You have to remember the double taxation element. When that C corporation distributes its earnings to shareholders as dividends, those shareholders are taxed again on their individual returns. The entity pays, and then the owner pays. It's the classic double hit.
Section 4. S corporations.
Now, let's shift into the pass-through universe, which functions very differently. We'll start with S corporations. So the crucial point is that S corporations generally do not pay entity-level income tax. Instead, their income flows right through to the shareholders. But listen, they don't just pass through one big mashed-up number. You absolutely must distinguish between ordinary business income, which comes from your daily operations, and separately stated items, things like capital gains or charitable contributions. These have to retain their specific tax character when they hit the shareholder's personal return. Furthermore, the exam heavily tests S-Corp eligibility, like the 100 shareholder limit and having only one class of stock, and the massive concept of shareholder basis. You literally cannot deduct a pass-through loss or take a tax-free distribution if you don't have the basis to support it. No basis, no deduction. Simple as that.
Section 5. Partnerships. Next up, we have partnerships. Much like S-Corps, these are pass-through entities. They file an informational Form 1065, but the partners are the ones who actually pay the tax. Partner basis is the beating heart of partnership taxation on the CPA exam. Think of a partner's basis as highly dynamic. It is constantly changing. It goes up with their contributions and their share of income, and it goes down with losses and distributions. It's also uniquely impacted by the partner's share of partnership liabilities. Just like with S-Corps, partnerships pass through ordinary business income and separately stated items, but they also feature unique mechanics like guaranteed payments. Those are deducted by the partnership but taxed as ordinary income to the receiving partner.
Section 6. LLCs, or as I like to call them, the legal chameleon. And this brilliantly illustrates a major exam concept. The CPA exam tests tax classification, not just the legal name. If an exam question features an LLC, you cannot assume you know how it's taxed until you dig into the facts. The IRS doesn't assign one fixed tax identity to an LLC. If it has one single owner, it defaults to a disregarded entity, meaning it's just taxed as a sole proprietorship on Schedule C. If it has two or more owners, it defaults to a partnership. However, and this is a big however, Any LLC can file a form to elect to be taxed as a C corporation or, if eligible, an S corporation. You really have to read the prompt carefully to see what form our chameleon has taken.
Section 7. Tax-exempt organizations.
The final major entity type you're going to encounter is the tax-exempt organization. This largely focuses on 501(c)(3) entities, like public charities. The high-level rule here is all about compliance. These organizations are exempt from federal income tax on activities related to their exempt purpose. Makes sense, right? However, if they regularly carry on a trade or business that is not substantially related to their exempt purpose, they generate what's called unrelated business income, or UBI. UBI is fully taxable, and if it becomes too large a part of their operations, it can literally put their entire tax-exempt status at risk. So keep an eye out for that.
Section 8. The comparison framework. Okay, to truly master this material, you need a mental map to compare these entities instantly. I want you to use this specific 6-question framework for attacking any REG entity question. Before you calculate anything, run through these 6 questions. 1. Is the taxpayer separate from the owner? 2. Does the entity pay tax itself or does it pass items through? 3. Do certain items have to be separately stated? 4. Does the owner's basis change based on entity activity? 5. Are owner losses limited by that basis? And 6. Are distributions to the owners taxable? If you know the answers to these 6 questions for a C Corp versus a partnership, you can navigate almost any simulation the exam throws at you. Remember, don't sweat memorizing indexed phase-out limits. The exam generally provides those. Focus your energy on mastering this framework.
Section 9. Application.
Let's move on and see how this builds with 3 rapid-fire examples to prove this framework works in practice. First up, imagine Alpha C Corp. It earns $100,000 in taxable income and pays a $20,000 dividend to its sole shareholder. Because it's a C Corp, the entity itself pays a flat corporate tax on that full $100,000. Then, the shareholder reports the $20,000 dividend on their personal Form 1040 and pays tax on it again. Boom. Double taxation in action. Next, let's look at a pass-through. Beta Partnership earns $40,000 in ordinary business income and sells a stock for a $5,000 long-term capital gain. Now, Beta pays 0 federal income tax. Instead, the owner receives a Schedule K-1. They report their share of the $40,000 ordinary income, and they report their share of the $5,000 capital gain as a separately stated item. Why? Because it has to retain its special capital gain tax rates on their personal return. Plus, both of these amounts will increase the owner's basis in the partnership.
Finally, let's look at an LLC example. Say an exam simulation introduces Gamma LLC. If the facts state Gamma has 1 owner and made no elections, all income goes directly on the owner's individual Schedule C. If Gamma has 3 owners, they're filing a 1065 as a partnership. But if the facts explicitly state Gamma filed Form 8832 to elect corporate status, you actually have to apply the C corporation rules we just discussed. See? The facts dictate the tax treatment, not the letters LLC.
Section 10. Common REG's exam traps.
As we wrap up this explainer, I want to warn you about the test maker's favorite unforced errors. These are the classic traps candidates fall into when they lose sight of who the taxpayer is. Now, what's really interesting about this slide is that avoiding these specific traps is vastly more important to your passing score than memorizing tiny exceptions. Do not treat all entities like C Corps. Remember the pass-throughs. Never forget that a partner or S Corp shareholder's basis is a living, breathing, constantly changing number. Don't ever ignore separately stated items by just lazily lumping them into ordinary income. Never assume an LLC always means a partnership without checking the number of owners and looking for elections. Never deduct a pass-through loss on an individual return without first verifying the owner actually has enough basis. And finally, never confuse the tax the entity pays with the tax the owner pays. I want to leave you with this final empowering thought as you prepare to dive into the detailed tax rules in the upcoming modules. Memorize this principle word for word. REG entity questions become easier when the student first identifies the taxpayer, then asks whether the entity pays tax or passes items through, whether items are separately stated, how basis changes, and whether losses or distributions are limited. Keep this map securely in your mind and you are absolutely going to navigate REG successfully. Are you ready to tackle the detailed rules in the upcoming modules? Let's go.